it increases our probability if, for example, now that we've seen price, basically it did a liquidity grab here at this area right here, because it was like we broke above the highs, we closed above the highs, but then we just didn't get any follow through. Price action, even like on this bearish candle, I'm not sure if you guys can see that. Let me zoom in a little bit more. Look at how clean, for example, it's like price breaks above, closes above, then you have exhaustion at the area, still kind of lingering, I would say, above the zone, those 45.80s. And then this candle is the one that really faked buyers out because it pushed towards the upside, broke above all of these highs, and yet it still closed bearish. So that still signaled to us that sellers stepped in aggressively at that area of interest. Following through on that price action, we have very clean and strong bearish price action. You can see you have 1, 2, 3, 4 against 1 bullish candles, followed up by 1, 2, right? Like, so the idea is, again, more bearish candles than you see bullish candles. What does that translate to? It translates to us seeing stronger sellers in the market. If that's the case, then let's follow through on that structure, which is we have a low here, a high, new low, and a high right here. And now we're back into these lows. This is the structure and the momentum that we're following off of these highs right here. What does that mean? We can see pullbacks into this area overall still respect that structure and yet still continue to go bearish, right? But what I wanted to show you guys is if we are to see, for example, an increased probability in price breaking the lows, in my opinion, it would be this. We don't break back above these highs, because if we don't break above those highs, that means that momentum is still strong, so strong that it can't even retest areas of interest right here for us to maybe sell off from this zone, meaning that sellers are stronger than the buyers that are trying to push price into this area. So what that means for us is that if price action, let's say, does not break above these highs, signaling that sellers are still strong and still following this momentum that we're on here, I believe that can increase our chances of breaking those lows. Obviously, we still need to break the lows because for all we know, price can just reject the highs and just go to the lows and then just stay ranging. I mean, that's basically what it's done here. It's what it's done there, right? It doesn't necessarily mean we will break the lows. But again, in my opinion, following that momentum, if we can't even get above these highs, momentum is still strong on the bearish side. That can increase the chances of us breaking towards the downside. That's just my analysis based off of the current price action. So we're clearing those range lows off of, obviously you can see those highs right there. So we're getting out of that range now. Finally, we're having a push lower in a pretty aggressive way as well. You can see this was just continuous bearish candles pushing price lower. We're likely to have reactions at this area here. But overall, guys, the ideas still remain the same. We just need to make sure that price doesn't really get above like those 45.30s and continues to push lower. Let's see just how far price can push right here. Let's see if we can actually clear the overall lows, get into like those 45.15s before maybe doing a pullback, getting closer into like NYSE. We got about 24 minutes until NYSE open. The lower we can be, the better it'll be, because that way during NYSE open, if we're going to get a pullback, the pullback can be short-lived going into this area of interest and then just overall continuing to push lower. What's also good is that we're seeing some dollar strength right now picking up, which is price staying above that area of interest that we had pointed out earlier on dollar, the DXY. So we're pushing above that area. It's looking like price is still strong on the dollar as gold is trying to push lower. So if that can hold weight and the momentum continues, this is good, because anything back above here, anything above these 30s just means that price is back within this area right here. Which would be this. Playing tic-tac. What is it? Connect the dot. Again, above, that's the 45.30s. This is why I say above the 45.30s, it gets messy because you're back in that range. At that point, when you're back in that range, in terms of sells, you don't know if price is gonna get to the middle of the range and then maybe sell off. You don't know if it's gonna get maybe to these highs and sell off. You don't know if it's gonna go as high as this and sell off, but it's above the range that things get tricky. Below that, we know momentum is likely to continue. We gotta now break these lows below the 45.15s, which is the area that I pointed out for you guys earlier. And we know, okay, momentum can pick up below that area because we're clearing lows at that point. That means that we have sellers strong enough to push below previous areas where price has reacted. Kind of telling us like the buyers that are here trying to push price up, as we break those lows, we're basically just eliminating. Without calling out anything, without saying for a fact we're going to break those lows, we still stated, you know what? Overall price action is still more bearish. Fundamentals are still more bearish. The momentum, if we can't break above these highs, still signals that we're more bearish. Notice how we did not get above those highs that we pointed out earlier. And then we have the momentum pick up, meaning that this momentum that we were on was still strong. Look at price action now. 200 pips right now below those lows that we had marked off. Look at price action. Study this further. What do you see now? You can wait for price action to create lows, and you have previous areas, previous highs. For example, like you have this low, this high, and now you understand, well, this is the high price point that price can yet pull back into and sell and overall still be bearish, because you have a lower time frame structure point lining up with an area of support where price, if it is to retest this area and not get back above into it, which we know is where price was ranging above or pushing even higher above that area, we know probabilities are still on our side. We can still look for rejections as it rejected right here, and for sellers to step in at those areas and then push price lower, at least to retest those lows once more. That means price can reach here, slowly make its way up, reject, fail to trade above, overall still continue to push. And then you have these lows to break for you to understand momentum can pick up below that area. But again, keep in mind, we already had about a 2% push lower on gold. So that's a really strong push. Dollar right now, it went from 0.42s back down to the 0.37s. So both are having a little bit of a breather right now as we speak. But overall, in terms of like the analysis and the session for today, I think we had a really clean session today. Really good moves. I mean, you don't see that every day. Freaking 500 pips below a zone of interest. That's for something for you to take advantage of, at least, 50 pips, 100 pips. If you're even shorter scalper, you could have taken advantage of these sells or maybe the continuations, right? Study those moves and understand where that came from. If you're a new trader and you are now just looking into how the markets are moving, understand the conditions that price is at when these move here. Is that when you talk about confluences in the market, right now you have, let's see what we can write up. So we got, for one, you got high inflation in the US. You got two, you got hawkish Fed. You got rate cuts. You got rate cuts being unlikely. You got $4. We'll put dollar in yield. Strength. Oh my God, did I just spell strength wrong? Embarrassing. There you go, strength. So, I want to know if you guys can pick up on a pattern, what I'm writing here. So let me see if you guys can answer this. Like, what is it that you're noticing that I'm writing out here? So we got high inflation in the US, a hawkish Fed, rate cuts more unlikely, dollar and yields rising. You have higher time frames, HTF, higher time frame bearish, gold. I'm gonna excuse my handwriting. Higher time frame bearish gold. What else do we have? We'll put geopolitics, or we'll put geopolitical, geopolitical tensions. What's the pattern that you guys are noticing here? What is the overall goal? Like, what does this give you right here? What answer does this give you? You basically gotta fill in the blank. Excuse me, and the blank. This is what I'm gonna write out. Stronger probability. I put prob, but you guys get it. Stronger probability for price to continue what? So we got all of these reasonings right here. These are the edges and confluences that you have in the market right now. Higher inflation in the US, inflation is climbing. We got a more hawkish Fed, rate cuts more unlikely, dollar and yield strength. We have higher time frame bearish on gold. We got geopolitical tensions continuing. That equals to stronger probability for price to continue. What did you guys say? That's basically what I'm looking for, Joshua. There's stronger probability for price to continue. We can put bearish, or we can put lower. Boom. That's the answer that we get to. So when we understand this right here, and we go and we look at price action, where are you going to lean towards? Does that make sense? Like, where does that push you, and what does your brain logically tell you to do? Most likely, if you are the type of trader that follows momentum, you look for the overall trend. You could even go as far as writing out here like market structure, bearish on gold, to have even more confluences. You could go further, put number 8, put momentum, pushing lower. Again, all of that. What was going against this right here, like above this area? The only thing that was, let's say, bullish. Price rejected lows / support. So when you look at the market, this was, let's say, what was in my brain without obviously writing it out for you guys. But now that we're here, we've already made our move. At this point, we're studying price action. We have all of these confluences on gold that are pretty much pointing for more bearish price action, which, Joshua, thank you very much, to continue down, to continue lower, against price rejecting the lows and the support above the 45.30s. At that point, what I tell myself is, I'm going to wait for price to break the lows so I can follow this, and I don't have to hold a trade because we just have this. Does that make sense? It's like, okay, well, price rejected the lows and we have a support. Does that mean I want to buy gold? Not really. At least for me, that's not what I'm looking to do. I'm looking to sell resistances or look for breaks and retests below areas of interest so I can overall just continue to follow this. I just want to follow this. I want to follow that overall market narrative. I want to follow the stronger probability moves. Stronger probabilities give me more of a chance to beat the market that is already very much going against me. If I have so many things going against me in the market, I have my own brain that goes against me sometimes. Why am I going to choose to fight the market itself? There's no reason. It makes way more sense, in my opinion, to just follow through on what the overall narrative and what the overall market is doing. And you can look to take advantage of moves like this one. Again, this is not random. This is the overall tone, the market sentiment that we're seeing right now in the market. So again, overall, the main thing that you want to get to is, where is my strongest probability going to be at? Is it going to be on the buy side? Is it going to be on the sell side? Does that make sense for you guys? So that way we can continue to evolve our trading game. What we were doing today in terms of preparation, we understood where price was at, which was this range basically was like these lows. That's where price action was at. We had created these highs. We also had these highs that were created for us. So we understood one thing, which was, okay, well, first of all, ideally, we want to make sure we break out of the range. That was the first thing that we wanted to do. We needed that breakout below this zone. That's for one. That's what we were preparing for. The other thing is, if you guys remember, obviously, the fundamentals and the technicals both were still leaning more bearish, right? We have fundamentals, technicals, more on the bearish side. Technicals, because we understood the overall trend was coming from these highs, so pushing lower still. That's what the technicals were telling us. The fundamentals, I literally just did a whole breakdown for that. You understand. You don't need me to repeat that again. We had dollar strength today. So the idea was clear. Get below the lows and look for trades below our area of interest, because of the momentum that we have that picked up from those highs. The highs being the highs of this range right here. The momentum being a lot stronger on the bearish side. So the preparation was simple. Either we wait for price to break these highs and do a deeper pullback into this zone for us to then look to sell back into this area, or at least back into this area right here. But if you guys remember, what did I say? If we cannot break above this area to do that deeper pullback into these highs, and obviously we understood above here would be deeper pullbacks then. Notice how I'm still aligning technicals, even though our fundamentals are still bearish overall. Notice how I still use those technicals to give me the clues as to when the market is going to do what the market narrative is pointing towards, which in this case was more for the bearish side. We knew, okay, if we cannot break above this, that means the momentum from those highs is strong. Be on the lookout for further breaks below the lows and potentially these lows to get retested. And if we break lower, we have these areas to go and retest. What did price do? We did not get above this area, so that didn't happen. That still meant that momentum was strong at that point. At that point, we're still waiting for price to break the lows, which it did. And as you guys saw on those lower time frames, we broke the lows and we retested in this area, still that overall area of interest. And then we continue to push lower. Did we or did we not talk about that? Look at what prices did. Zooming in here now with the lower time frames. Again, the range up here. We had our highs, lows. We understood if we can't get above here, momentum is still strong on the bearish side. We just need to break the lows and clear out of that range to have a clear perspective as to what price action is going to do. Look at how we broke those lows. We retest in that area. We don't get back above here, which we understood above here. We're in a range. At that point, no need to fight the market. So again, using those technical clues, you fail to break above. You now have these lows to be on the lookout for. If we can't get back above into that area, still the momentum is on our favor because it's showing us that sellers are pushing price lower as price action was trying to get above here and it failed to do so. That means that those sellers that are active in this area are still much stronger than the buyers that are trying to push price back up. Again, still signaling to us, bears are more in control. Look at that move that took place afterwards. We finally paused here. We know, okay, continuations are below here. If we start to break above these highs, wait for maybe some deeper retracements as price can correct some of this move. Right now, we're back at these highs, or we've reached this high point pretty much already. And we've rejected this now twice. Following through exactly with what we're doing, we know momentum is still in our favor. As long as we don't get above here, that means that price can still very much go up here. Reject anywhere between here, here, here. We gotta break these lows now to continue to push further lower back into this area.